Figure out what kind of investor you are in about 2 minutes. There are 4 categories of investment we use to label opportunities on the spectrum of risk and return. By understanding which of these 4 strategies best appeals or works for you, you can see what kind of investor you are and the sort of projects you should continue to seek out. The most conservative strategy with lowest risk and lowest returns is called core investing. These properties are located in strong metropolitan markets, only take ultra-safe, credit-worthy tenants on a long-term basis, and involve minimal debt financing and leverage. Any type of investor may want to have a few core investments to safeguard and diversify their portfolio. Core Plus is essentially the same: flourishing market, high-quality tenants, easy financing. But there may be chances to increase net operating income. For example, an upcoming lease rollover could provide an opportunity to increase rents. Then again, there is also additional risk. The tenant may vacate. The next 2 categories are for investors seeking a work in progress. Category value add involves higher risk and possibly higher returns. An investor looks for the challenge of a fixer-upper or property with higher than average vacancy rates, hoping that improvements to the building, decor, and functions, etc., will more drastically increase the value compared to the discount price it was purchased at. Often these are resold to core investors. The risk is that the property will not yield more cash flow than it cost to purchase and better the investment. Lastly, the strategy which involves the highest risk but also the possibility of higher returns is called opportunistic. This sort of investor is willing to take on huge or risky projects for the expectation of greatly increased returns. They may look for a building project, investing before a single brick has been laid, or pioneering in a quickly changeable or new and alien market. Perhaps they are refurbishing or upgrading a property for a vastly different use and purpose. What types of investments are most interesting to you? No strategy is better than another, and no one says you are limited to one. Consider the risks you are willing to take on, looking at worst and best case scenarios, and from there, determine which opportunities best fit where you are on the spectrum of risk and return. Look to Tycoon for investment opportunities that fit in all of these categories and meet your investment objectives.